Welcome back to the Williams Real Estate channel. I'm your host, Geordie Williams, and today we're covering units and townhouses versus buying a house when building a portfolio and investing. So there's a bit of a misconception that you shouldn't buy units and townhouses when building a portfolio or investing due to the lack of capital growth compared to buying a freestanding house. However, they are definitely a necessity required if you are looking to scale and build a sustainable property portfolio. So we'll run through the pros and cons. Units, villas and townhouses have a high gross yield, typically. Anywhere between 6 to 7% gross yield on purchase price can be sought after in Sydney and in around Brisbane. They're good to get started, so they have a lower entry price. You need less capital compared to a house to get into. Easy to finance, so the banks love them. Having a high, strong cash flow with a low entry level purchase price reduces the risk and the holding cost of that property. Maintenance and insurance for the external common areas are included in the strata fees. So that's the benefit of strata. You can buy them interstate and not have to worry about the external facade of the building or the common areas, because that is maintained by the strata company, which is included in that strata fee cost. They have a low land value component to them. So this compared to a house, because as the land is split up between all the units within the complex, there is a overall less land value per unit. So this is a positive, because then it reduces the amount of land value that you withhold, so you can stay underneath your threshold within your state, whether it be New South Wales or Queensland. So then you're minimising the amount of land tax you have to pay. The cons for units, villas, townhouses is, I guess, there's limited value add. You can, strip out kitchens and bathrooms, do minor cosmetic renovations to add value, but I guess you can't redevelop, knock down, rebuild like you would have that ability if you own the whole place, like the whole lot of land, like a house. The body corporate starter costs can increase if there is excessive maintenance. A way around that is obviously buying a complex that doesn't have high maintenance costs, like gyms, lift, pools. So if you avoid them, then you can mitigate those types of risks. And they do over the long term have a less capital growth compared to standalone houses, but they definitely do play a part in building out your portfolio and moving forward. So houses are good for the ability to add value, knock down, rebuild, do a duplex, extensions, adding additional rooms. They have higher capital gains according to CoreLogic data over the long term, so they do have better rental yield growth and capital growth. No body corporate or strata. However, that can also mean that you have to maintain the whole property because you own the property. There is no management business that will maintain your property for you. The cons, they have a higher purchase price, so they're harder to finance, harder to purchase, can make it harder to scale if you solely look to just purchasing houses. So you'll see some spruikers out there saying only stick to houses, but if you only stick to houses, then you're going to limit your serviceability. You'll eventually get capped out. So you need to throw in some units, townhouses with high yielding returns to allow you to keep moving forward, to allow the bank to continually lend you more money so you continually build out the portfolio. So there it is, pros and cons. They both definitely do play a part. when building your portfolio, I like to look at visualize whether or not to go for a house or a unit or townhouse, depending where you are in your stage of investing. A good analogy is I like to visualize the property portfolio as building a campfire. So you can't build a campfire just with split wood and logs and big thick timber, because eventually your fire will smolder and you'll be trying to get the fire going because it's too heavy on the timber. That's like buying houses and duplexes and blocks of units straight off the bat. You need to start small with the kindling, which is units, townhouses, and allow compound growth to take you through a few market cycles, and then allow the smaller purchase price, higher yielding assets to continue to fund themselves and then fund bigger projects and deals down the line, such as houses, duplexes, and blocks units. Anyway, thanks for watching. If you need help, reach out. Always happy to chat. Cheers.